this is huge. This is pre-Clarity, right? So they can only really do this on Bitcoin. But once we get some Clarity Act, then all of a sudden you can see how the desks want to be doing this. That's probably some time away before we get to some of the other stuff, but we are witnessing an institutionalization of crypto asset class right now, and it is pretty cool from my perspective.
Welcome back to another episode of Network Spotlight. Friend of the channel, Sebastian, is here to walk us through what's going on with those rate cuts, what's the probability of us having them, and then talk about some of the reasoning behind why the chances of a rate cut are actually going up. Plus, we've got some institutional adoption happening in this space that we'll go over. But first, Sebastian, let's kind of do a recap of how we got here. You put out a tweet about Deutsche Bank, and they put out like a post-mortem about what happened, like how do we get to this $80,000 Bitcoin? What were the main points that they were trying to get across here?
Yeah, so kind of like what we talked about in prior weeks as well. They mentioned the fact that like the selling was more kind of like correlation driven. Things having trades getting a little bit crowded and long, and then getting into year end, people looking to rush for the exits to protect some gains, and then Bitcoin being kind of collateral damage there. And then of course the some of the damage that happened on October 10th probably meant for less liquidity in crypto markets overall as well. So nevertheless, like crypto led to the downside, but the overall all like equity and risk assets kind of did pull off. So we'd seen that like the crypto and the Nasdaq and the S&P 500 had a rising kind of correlation, and that kind of like increased a lot on the downside there. So some of the catalysts that drove that would have been, of course, when the Fed kind of started to back away from the really kind of dig in on the idea that they were going to cut in December. It was like, oh wow, this is kind of not what people wanted. And then around that same time, or like a little bit, or like in late summer, anyways, it was the idea that we were going to get this Clarity Act, or like this positive regulation for crypto approved this year, fell, or kind of like was kind of pushed into next year. And so now all of a sudden you have like less of a catalyst to own crypto into year end. Plus you've got less like liquidity in the ecosystem, like with respect to like broader global liquidity. And you have this kind of like 10-10 thing with market makers, kind of creates this like really heavy kind of tape. And then you layer on top of that, significant supply from Bitcoin ETF redemptions, and you kind of have this kind of like cascade, which is just kind of what happened. But all that to say, these analysts at Deutsche Bank, which is a sell side equities desk, they're not usually known to be pump the crypto, but it was pretty interesting that they covered this, and they said it was just a mix of like macro headwinds, policy uncertainty, and then weak flows, in addition to investors locking in gains. So you step into 2026, you're thinking, okay, so Bitcoin's at 80K. What do we got? It's like, okay, well, we probably have rate cuts in our favor now, given the recent rhetoric. The 2026, we should see some action around Clarity. And certainly like Trump will be looking to support risk assets, and then a broader liquidity improvement. So all that to say, we've got a nice favorable background going into next year. And me personally, I've definitely been kind of watching that Clarity very closely. I think that's a really important catalyst, because we've seen like the banks and institutions want to do more crypto. It's just they haven't been able to. They can now a little bit, which we'll talk about in a bit here, but and they're going full steam. And so I think it's a real powerful catalyst.
Absolutely. And then another bank is also getting into the mix. So Bank of America's chief strategist, Michael Hartnett, was also talking about the reasons why he believes we're going to get a rate cut, and how crypto is going to be one of the first sectors that will benefit from this. What can you tell us about this piece?
So there's a lot of people talking about this like yen carry trade, and like the unwind there, as like Japanese central bank policy kind of tried to pivot away from a stance of relative easing for decades. That hasn't really panned out very well for them. Excuse me, in terms of like the yen appreciating, which is difficult for their economy, as well as the yields rising on the debts, right? So that kind of has a double impact of like kind of hurting savers, as they see the value of their bonds drop, as well as just as in benchmark interest rates are going up, so cost of capital is more expensive in the country. So what Michael Hartnett, who's Bank of America's chief investment strategy, is saying is like this probably like ends in this with a reversal, and then the more liquidity getting going back, and in which case that will be beneficial for global kind of capital markets as like and the Fed, for example, isn't going to stand idly if the Japanese central bank is contending with these various issues, having like a quasi catastrophe on its hands. Really, the Fed's going to they're not going to be like being super restrictive into that kind of global market. um and so like that's why they kind of see like, okay, we're going to see something happening here. um and he's kind of effectively saying that the Fed might talk tough on it, but like at the end of the day, the labor market hasn't been great, and you've got like some serious global stress around. So it'd be very weird for them to. It'd be a policy mistake, if they were to try to go against what the market's positioning for. Um, and then it was interesting because like part of his note that he's talking about, which covered a lot of other things as well, like to be fair, but a lot of this was talking about like crypto and watch crypto and how like it's the fastest horse and like and all that kind of stuff. So here we have another kind of like major trading desk and investment strategist talking about keep an eye on crypto because it moved fast when it thought there was a policy mistake at foot, and is likely to rebound back just as hard when the market kind of starts to position for the Fed, also having to like pivot to a path of easing. And so that he was saying one way to play this for his desk would be like buy zero coupon bonds, but like that's because maybe some people like aren't able to or are interested in stomaching some of the volatility of buying Bitcoin. But the whole time he was saying, he's like, look, Bitcoin is the one to watch for this kind of stuff. And so I thought it was really interesting that like here we have another kind of like major strategist talking about like global policy or whatever else, and how to watch crypto for that. We'll watch the crypto for the keys on when to get moving on that. So here we have it. Our magic internet money is being touted by some of the smartest minds on Wall Street as an important key. So I don't know, the idea of a 4-year halving cycle or whatever else being the major determinant of Bitcoin price on a go forward basis, I think is a little bit outdated.
Well, I mean, we've seen from this particular cycle that, look, Bitcoin had its run and the quintessential altcoin season hasn't happened, which it normally does. So we are already in a different territory. So things are already not looking the way that everyone had thought that they would. But I want to go back to this whole rate cut notion. And before people get excited, at least in the short term, let's talk about December, because you pointed out something. Well, this is another post about gold, which I want to come back to. But you pointed something out about December, which is interesting because that's where people usually either they take their profits or maybe they want to cut ties with their losses. And so usually the market is somewhat bearish, like at least in the short term, right? We're not talking about what's happening next year, but I think it's something important to point out. And people don't always just jump to conclusion that, yeah, just because we have these rate cuts coming, that all of a sudden the market's going to rip.
Yeah, yeah. So there was another tweet that I'd flagged that kind of talks a bit about the rate cut expectations. I can just touch on that one though very quickly. So, yeah,
This one
there we
right
go.
here.
So, yeah.
Yeah.
So again, that we touched on this last week. Just the probability for an increase or for a cut has now risen quite substantially once again. So the market's kind of calling for it. We don't know for sure. The Fed could come out disappoint, and then you can believe that with that plus a relatively quiet tape in December, like with a lot of people not trading as much, institutions kind of hanging out for the rest of the year, not deploying new capital, you could get a pretty big move if the Fed doesn't cut in December, given the clear expectation for them to do so. So that's a risk. But overall, like mostly the desks are kind of saying they expect this to happen. And what's interesting about that is Goldman, for example, and others are alluding to this, where they think, okay, so we think a cut in December and then a pause in January, and then we'll wait and see. So like the Fed probably says, okay, we'll give the market what they want, or like give what we should do, depending on how you look at it. And then January expectations will kind of be like no one's going to think they're going to do much as we wait for more data to come through. And if that becomes the expectation for Wall Street, then and the global macro desks, then I think that's like a pretty good setup because it's like it lets the Fed assuage markets now and then kind of gives them some buying time into early 2026, whether that's January or February, depending how the data shakes out. So then in that case, it's like, that then the prices aren't tethered to like expectations as much. It's like, okay, well, we expect them not to do much in January, maybe February too. And that's pretty positive, I think, for a crypto backdrop. And then, yeah, to your point around tax loss selling, something that I kind of started thinking about a little bit is, we're at that time of year now where in equities, some people will start to look to like sell a stock and then go buy it back in the new year to kind of realize a capital loss in this year, offset some gains, and then get back into the position in the new year. Crypto doesn't have the same impact. Like I think I don't know that there's as much of a restriction in the U.S. anyways, but there nevertheless is likely some folks who will crystallize some losses and then and move forward into the new year. And just like the one chart I put up there in that tweet that you mentioned before with the turkey, has just like the broader crypto ecosystem is down 40%. When I sent that out, kind of year to date. So and then from just a few weeks ago to now, it's down way more. Or some of them are down way more. So there's probably some heaviness to come from the tax loss sellers. I just don't know how big that is in crypto. Like in traditional equity markets, that can be pretty substantial, especially like in smaller cap or liquid names. So something to keep in mind. But whether or not that gets offset by the market's kind of rebounding from the pullback that we just had. It's hard to say, but something I was keeping an eye on.
The other thing to just not to put a wet blanket on everything, but quantitative tightening ends in December. And historically, when quantitative tightening ends, the market actually is kind of bearish during that period of time because we're not necessarily in a period of easing just yet. So it's more of like stopping the bleeding, not necessarily healing yet. So that's kind of the best analogy that I can give. So it'll be interesting to pull up some information on that in the future, but yeah, something else that caught my attention. So there are reasons to, not necessarily be bearish per se, but just be very, cautiously optimistic about what the future holds in the long term, but maybe in the short term, still a little bit of uncertainty in the air about what happens in the month of December.
Yeah, yeah, for sure. Like, I mean, we don't know exactly what the Fed will do. I think again, it would be, very surprising to the market, which the market doesn't like if they were to come out and not cut. Even though they had previously said that there was not a guarantee in December. Since then, the conversation is one of like we should be able to do this. So I believe that will probably be the case. And then January doesn't have as much risk associated with it. So agreed. Like we kind of climb that wall of worry, and then what that does for tax loss selling is hard to say. I mean, it's some of that might have already been kind of captured in previous in the downturn already,
Yep.
and that kind of thing too. It's just something I was thinking about, but we'll see how much of an impact.
Yeah, Sebastian. And meanwhile, full steam ahead for these institutions. There's nothing but great news. Well, I guess depends on who you ask. But for those people that are proponents of crypto adoption, I mean, you're seeing it on an institutional level at an all-time high.
I guess we had like a trio of tweets here. First, it was like Zero Hedge kind of commenting on a note from J.P. Morgan saying how crypto is emerging as a tradable macro asset class. And again, this is the world's largest bank talking about crypto as a global market, a global macro asset, and then specifically saying how like they don't think the 4-year halving cycle is relevant anymore, and they kind of had like a potential for a higher kind of like price target over the long term as well. So pretty cool to see that like in print, from a sell side desk. That's pretty meaningful. And then If we go over one tweet, there was another kind of change that happened where the Nasdaq is now going to with IBIT options, so they're increasing the options limit to 1 million. So this is like truly allowing for institutional players to like get involved on the institutional uh institutional vol. So like like if before 25K was too low with the volume and the activity, it's like people are saying, hey, let these people trade this, they want to, and so now that's going to increase. It still requires like SEC approval, but like if that allows if that's allowed, then it's like this this options market will be like the biggest in crypto. So that's pretty meaningful. And then going back to the tweet that you had up before, back to JP Morgan and the that what's going on there in the options market is that JP Morgan sold a Bitcoin related auto call or a callable note, which is a structured product, simply that involves packaging options in certain ways that like will like have like a limited downside but with like and a capped upside, but still having lots of convexity. So you could make like whatever, like in this case 1.5 times your money or lose 30%. So people look at that and they're like, oh, it's a good risk return. I like the idea of like getting exposure to that Bitcoin volatility, but this way I limit my downside and then enjoy some upsides. Yeah, so there's different ways to structure these kinds of things. The basic is that people like trading desks love to sell these because they can like package the risk return in a way that clients like, and then they can embed a lot of margin within it too. And so to see again the world's largest trading desk selling this is at the same time as other banks and stuff like that are talking about crypto, talking about it as a global macro asset class, and the options market being allowed to take in more volume. Like this is huge, and this is pre-clarity, right? So they can only really do this on Bitcoin, but once we get some clarity act, then all of a sudden you can see how like the desks want to be doing this. That's probably it's some time away before we get to some of the other stuff, but like man, like this is a real kind of like we are witnessing an institutionalization of crypto asset class right now, and it is pretty cool from my perspective.
Amazing, amazing. Moving on. So outside of Bitcoin, you obviously have all these layer ones that, unfortunately, just due to the macroeconomic conditions, they haven't been doing that great. But there is some conversation that that's not necessarily the main reason why they're not doing great. It's because we're just not pricing them correctly. And so this is an interesting piece that you commented on. What are your thoughts on this tweet from Santiago R. Santos, who is considered a pretty recognizable figure in the space?
Yeah, exactly. So, I liked the article that Santiago put out. I think it's great to, you know, challenge our priors on and like think about things from a different perspective. And I think what like it makes a market to have different people kind of have different views. This story is kind of still playing out right now, where like different people are starting to weigh in kind of with their own perspectives on this. But effectively what Santiago is saying is that like for whatever reason, crypto today has this crazy valuation, and it's not justified based on the current levels of usage and monetization. Um, and you can't really disagree with that today. Like if you look at things, you're like, okay, like that's not like things are rich, and like several $100 billion assets or whatever else is big for single digit million people kind of messing around on this stuff. Um, I guess like my take on it is just that like you know we're we're like obviously pricing in a eventuality that involves a lot more activity happening on chain and a lot more people transacting on chain and a lot more value being transacted, whether that be like monetary value, time value, whatever it might be. And so the internet, as we that like web 2 or whatever else, didn't have necessarily like built-in monetization rails that crypto does. And so I think what the market is trying to say is that like there's a good chance that like we're going to get like more internet level traffic on blockchains, and that will drive economics such that these things are valued in a way that captures some eventuality of that happening today, but would be worth a lot more in a world where that actually starts to happen or actually does happen. So for sure, you could make the case that like buying these assets today implies some of that, and you don't think that's going to happen, so you think it's a bad trade. Understood, right? And that's fine. But like I think something to think about is this famous like Francis Galton, he like guessed different people, asked different like a town fair to weigh in or to guess the weight of a bull. And these were like, people who were farmers, people who were butchers, and all that kind of stuff like that. And they were all pretty far off their estimates individually. But when he did the average of the estimates, they arrived at one like within a pound of what the actual weight was. And so this is kind of used as an example to kind of talk about the wisdom of crowds sometimes, whereby I'm not a believer in the efficient market hypothesis necessarily, but I do kind of think that like markets are could be an important source of information at some point. And there was another guy who I really like to follow a lot too, named Adam Robinson. In like 2016, I listened to a podcast with him, and he was mentioning he's like when people are looking at markets and like that doesn't make any sense. He's like it's their model that in their mind that's broken because the market will make sense. It's like you don't understand why something is going down probably means it's probably going to keep going down or whatever. You know what I mean? Or your model isn't understanding it correctly. And so again, like I'm not trying to take a shot at Santiago Santos. The guy's a super smart dude, but I look at what, his argument there and I'm like, okay, I kind of get that, but I'm like, people could short crypto, right? Like if there was enough capital that also agreed that this is stupid, they would just dump on this thing, and they could do that. But that's not happening. And so to me, and we've seen like as we've seen the valuations of these things increase. A, as people use them, network effects. B, as people are allowed to use them, regulatory kind of regulatory improvements. And then C, as more apps and cool stuff get built to bring people on chain as well. And so I think what we're probably pricing in is like an eventuality of like a lot of that stuff happening on chain today. And something similar to like, people never understood the valuations of like Amazon in the early e-commerce days or Google in the early search and stuff like that. These guys aren't making any money. I don't understand. Why is the stock going up? And it's like, well, it's pricing in an eventuality that like maybe doesn't fit the mold of someone who's looking at it and saying this doesn't make any sense, but there's enough power or purchasing power that's pushing something in a way that does. Now, like, yeah, so that's kind of how I'm thinking about that at a high level, and it'll be really interesting to kind of maybe pick up the thread next week where we've seen other people kind of start to weigh in from across the ecosystem too. So I'm definitely going to try to keep a close eye and maybe we can share a synopsis of different views.
I was just about to say that, Sebastian. So next week, we're going to have another episode. We do this every week. So we'll continue this conversation around these valuations. It's a good place to put a pin in this one. Sebastian, thanks so much for joining. Amazing stuff, as always, talking about the macro, the institutional adoption, and then also touching a little bit on the L1s. And for those that are watching, if you found this information informative, please give us a like, subscribe to the channel, give us a comment as well. Which story do you like the most? And definitely check out Sebastian's tweets. He puts out really good stuff. I'll include that link in the description and catch you all on the next one.
Thanks, Mikhail.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.